Eric Muathe, Muathe.com, with World Market Analysis video for the weekend of December 31st, 2016, and also for January 1st, 2017. Let's take a look at markets and how they closed for Friday's session, and we can call it a mixed bag as far as Asian markets are concerned. And let's take a look at the euros. We can see a positive close on Friday. Nice conclusion to the year, the end of the year. Take a look at the Americas with about 1 hour to go before the close, and we are looking at markets up as far as Brazil is concerned. Canadian market slightly up. US markets at the lows of the day, 1 hour to go, down about 0.68. Let's take a look at those charts. Now, one thing I have to say is, as we come to the conclusion of the month here and the beginning of a new month, new year, we need to take a look at monthly charts, since new month can bring fresh energies that we need to consider. So this video is going to be taking a look at monthly charts more so we can see how they are setting up. And for the most part, and I do mean for the most part, what we're going to be seeing here is that most, if not many, of the markets on the monthly charts are coming and hitting resistance. We'll talk about that. And most of them, most markets, are pointing in that direction, and I'll discuss that throughout the course of this video. So let's begin with Australian market, and we can see here that it did break out this past 2 weeks. Now, if you take that by itself on face value, looks like a quality breakout. But I'll show you some problems with this breakout, and it goes back to this previous break. That break was what brought the Australian market off the highs of early 2015. Essentially, what we've done is come back to test that RSI level, and the last time we came back to that RSI level was good enough to stem the slide there, and we had a pullback. We've worked ourselves back in terms of RSI, and we seem to be coming back there. I think this is a logical area for resistance. The reason why I say that is we go to the monthly chart, take a look at the long-term monthly chart, and you can see what I'm talking about here. On the RSI, seems to be coming back to topside RSI resistance, and also coming back to test the previous break line, and this is based off this recent break, again 2015 break here, brought the market off the highs, and we're essentially coming back to test that break level. So you got those two lines that should be causing a problem here as we begin the new year. Chances are more than likely it does find it difficult moving above those levels. Sticking with monthly charts, take a look at the Chinese market, and we can see that since this break, RSI break in late 2015, before this drop here, this has been a problem lately. If you take that break line and extend it out like this, you see that the market has come back, hit that level, and as of right now seems to be coiling back, and it is that resistance that now puts pressure as far as the Chinese market is concerned, more so if it drops below, and when it drops below RSI 50 on the monthly. If it does drop below RSI 50 on the monthly, expect a big down month. The last time it dropped below RSI 50 was during the most recent drop, during this monthly drop here, coinciding with the RSI moving below 50. So a drop below 50 might open the possibility of a big down month whenever that happens, if it happens. Sticking with long-term monthly charts, take a look at the Japanese market since the lows of 09. This is the monthly chart, and I'll show you two lines that could be offering a problem here on the monthly chart. You have to go to this support line here. This support line broke in late 2015, which is here, and so we can take that information, draw a line right there from the break level. In other words, the sentiment break that took place here during this period is now being tested, right here as the market closed around those levels. Failure to move above that red line offers strong resistance, and the market could be setting up to drop or at least pull back. So that's a level to watch for resistance and for potential market reaction lower. Also, we can consider this a back test line. So this line here is also becoming an area to watch. The last time we moved below that line, the market did react negatively. So here, during this pullback, we are coming back to test that blue line. If the market confirms resistance on those two lines month to month, then clearly the next meaningful direction, even as far as the Japanese market is concerned, is for lower prices. So after a strong move off the lows here of 2015, the only way the Japanese market moves beyond 1900 level, 19145, is by moving above those two lines. Otherwise, the next meaningful direction from a swing trade perspective should be lower once resistance is confirmed month to month. If you take a look at the Nifty, since 09 on a monthly chart, we can see some of the things we're talking about here. It recently came back to test this line here, which was the backtest line, and failed. So off the highs of late this year, you can see now it is pulling back, or has been pulling back over the last 4 or 5 months. And it also coincided with the previous break level on the RSI. So if you take this break level here, which is the movement somewhere there in middle of 15, and draw a line from there, this also became resistance. As you can see right there, market hit those two lines and stalled. So that's why the previous charts for Australia and also for China and for Japan, they seem to be in similar levels where the RSIs could offer some type of a problem here. As far as the Indian chart monthly is concerned, or the Nifty, the key is whether it can hold above RSI 50 or not. If it can hold above RSI 50, then it might have a chance of recovering. In fact, if we take a look at the 2-year weekly chart, I have been speculating that this market could hold around current levels, going back. The reason being that going back to this RSI movement, I've been talking about this the last couple of weeks, that pretty much the RSI was coming back to test this ideal entry. On hindsight, that RSI movement or sentiment breakout coincides with this weekly move, and of course the market went on a nice run after that. So we can use that information, and coming back here over the last couple of weeks, essentially to test that line. And you can see what happened here is what we were suspecting was developing. It took a while, but ultimately we have a nice double bottom, which could be the reason why it is beginning to show stability and a movement higher off recent lows. All right. Also, here we see lower weekly prices, but the RSI showed a small improvement. That's another good development. And don't forget, there was a previous breakout line. So this line, let me just change that a little bit. This breakout here coincides with the RSI jumping above that 50 level, and we're talking about this period here. Market hasn't been back to those levels, so we extend that breakout line, and it was also becoming relevant again with a nice double bottom over the last couple of weeks here and here, which might explain why the market is holding and has recently bounced this last couple of days. In fact, let's draw that again, and we are talking about this line here that we've been watching. Markets come back to test the same line, and it has held again double bottom support with a successful back test, which might explain the recent move. So the weekly chart is offering support on those two lines and the previous line we drew. So as long as the market is bouncing on those two lines, you have to look at this as being a market that is stabilizing. So week to week, that's what the bulls wanted to see. Now there's a problem here on the daily. In fact, this has been a problem over the last couple of months, and it is on the daily ever since this break. So there was a break here in September, which is the movement right, let's see, this movement here. Ever since this movement, market's been low in price. So we take that information on the RSI and use it every time we get some type of rejection on this line. We know it is meaningful. So let's test that. We can see resistance here for the highs there, resistance again here for the highs there, resistance recently here for those highs, and we've come back to test this line. So failure to move above that line, failure to move above RSI 50 might suggest that around here is where you'd expect day-to-day pullback. So until the market can move above that blue line, resistance on that line might suggest the next meaningful swing trade might be lower. Keep in mind, if you take a look at the hourly chart and go back about, let's say, about 6 months, you can see that off the highs of September, there was an RSI break. That break brought the market off those highs. We haven't been back there, so we draw a line from there, which is a uniformity line, and it's been a problem. Even recently, we hit this level here, stalled, pull back, and now we are coming back to test that line. So failure to move above that blue line hour to hour suggests that, again, to be in sync with the daily, that it is possible that here with the resistance, if it is confirmed, of course it's a if, we don't know, if it is confirmed, then we can see once it is confirmed as resistance, then it points to the idea that the daily and the hourly are pointing to a market that could pull back. We take a look at the Bank Nifty, and we can see here that this was the breakout that was successful in bringing the market off the lows of 2016. So this RSI breakout during this week was successful in beginning this nice uptrend. We take that information, that sentiment level, and there you have it. Over the last couple of weeks, markets come back to test that line, and we've seemed to be holding with the double bottom support. Clearly, if that continues holding, that's great for bulls. Otherwise, if something happens here that would break that line, that would be bearish. If we take a look at the monthly was back to a sell line about 5 months ago, when it came back to test this break line, and we suspected the market could stall at that level because this is what brought the market off the highs there. Sentiment was being tested again. Right there, you can see the market hit that line with a double top. Here it took many months, but that was the look, and so we've seen a pullback. Don't forget there was a failed breakout that also gave us the idea that the market was running out of momentum. Don't forget that this line here on the RSI has been a problem. If you go back to the most recent huge bear market areas, you can see a break of this blue line here, which also was a break of a trend line area in 2008, brought the market lower. During that period, there was also another break and a trend line break here, which brought the market off the highs of late 2010 and into the bear market of 2011. And of course, there's a break here on that blue line and a trend break during the highs here before this drop. So we can see that month to month, the monthly chart continues to offer question and still points to a market that could conceivably be going lower. If the monthly chart drops below RSI 50, that would be a problem. Take a look at this daily chart, and the daily chart also, you can see topside RSI coming in play. So it's coming back to test this line, which could be a problem if the market cannot move above that level. Let me show you another simple line that is also coming in play. It is this backtest line here. The last time we hit that backtest line, we stalled during this period here of the daily highs there. So we can see that if the market is unable to move above the blue and the red line, chances are the next meaningful direction day to day is also lower. If we take a look at the hourly for the Bank Nifty, we can also see that the hourly is suggesting that this is where we should start expecting some type of a resistance area, given that it is coming back to test this recent break in November. The break there brought the market off the highs. We draw a line from there and should be like that. You can see we've come back to test the same level. We seem to be stalling hour to hour, just like we saw for the Nifty. And don't forget, there is this top side resistance line that is coming in play. So let's take that blue line out of there. Take a look at this line, which is also coming in play right here, right now. So those two lines, if the market is unable to move above this line here and the previous line, then we are looking at a market that could easily be setting up to pull back if this continues to be the look. So essentially what we have here is a fight going on between the weeklies and the dailies and the hourlies. We can conclude that as long as the daily and the hourly are offering resistance, this market should be on a pullback mode. If we take a look at the South African market, we can see that the weekly RSI was offering support, and this line actually goes back to the lows of 2008, and we were expecting it to recover, and it's been doing exactly that over the last couple of weeks. So the weekly looks like it is showing stability. Again, this is now being contradicted by the daily chart, which shows that now the market is coming back day to day to test this recent break, which has been a problem ever since the break of August. You can see the break there and resistance in September off the highs there. We are coming back here in late 2000, last trading session 2016, and the market could easily find it difficult to move above that line. So resistance on the blue line suggests that the market could pull back day to day, and yet on the monthly it has an opportunity of showing RSI uniform activity bounce back above RSI 50, which would be bullish. Take a look at this here. You get uniform activity below 50 back above it for the re-entry there. Even this is uniform activity below 50 back above it for the re-entry somewhere there. Uniform activity bounce for the re-entry here, and now trying its best for uniform activity bounce. So if the monthly RSI stays above 50, this market should be stable. Otherwise, if it drops below RSI 50, we can expect the beginning of another down month or months. So either stay above 50 for the possibility of a continued bounce, or you crack below 50 and now you're setting up for a major drop. Let's take a look at the French market. On the weekly chart, we can see that it's pretty much coming back to test this break level from 2015 off the highs there, and pretty much it is right now back to that level, and resistance here on a week-to-week basis would suggest that the next meaningful direction is lower, but don't expect it to drop just suddenly off. As long as the daily RSI is holding above 69.1, you have to assume that the market continues to be stable, if not bullish. It's back below that towards the end. I think it closed slightly above that because this is Thursday's chart and does not reflect Friday's chart. But here we can see that as long as the RSI is above 69.1 on the daily, the market should be stable to bullish. And the problem here is the long-term monthly chart for the French market, which is coming back to a level where it stalled recently. In fact, off the highs of 2015, the RSI broke down here, market came off the highs. So essentially we've come back to test that line, and that line could and might offer very strong resistance. So if the chart is unable to move above this blue line, we can reasonably assume that the next meaningful direction month to month is lower. In fact, if you take a look at this monthly chart and go backwards, the two big bear market areas began on this line. The break here, which also coincided with the trend line break, as you can see, That was good enough to bring the market into a major bear market period. There was another trend line break and movement below the blue line, which brought the market into another bear market phase for 2008. If we show resistance here month to month, boy, that would open the possibility of big down months in the coming for 2017. Take a look at the German market. After a nice 7% gain for the month of December 2016, it is also coming back to potentially challenge the recent break level, and that was this break. RSI broke down right there, which is off the movement there. We draw a line from there and test that line even backwards. So here, test that line, and just like we saw with the French market, it corresponds very well with the major bear markets over the last, let's say, 25 years or so. You got this break below the blue line, below the trend line of the black line. Off the highs there, we go into a major bear market. We break again. Is a trend line break and movement below that blue line. Off the highs there, going to another bear market. And the problem in the current market is we are coming back to test this line. If we are unable to move above that, could be a problem. Even here we see double top rejection above the blue line, back below it for the highs there. So month to month, this could be offering a situation where the German market could also stall. Don't forget that on the monthly chart, just like we saw with the French market, it is coming back to test the previous recent break on the weekly. So this break here in the weekly brought the market off the highs of 2015. We take that information and draw a line from there, and we see that the market is in essence coming back to test that line right there. So failure to move above that line might suggest that the next meaningful direction is lower, but day to day RSI continues to hold very well, continues to hold above 69.1. As long as the daily RSI is above 69.1, that should be a stable to bullish market. If we take a look at the FTSE, we can see that this past 2 weeks it's been trading at breakout levels, and that looks great if you take a look at this from a price perspective. But if you take a look at the RSI, now you start realizing that it is not showing strength, at least as of right now. You got an improvement in week-to-week prices, but the RSI continues to show resistance, or at least is showing negative divergence. And that negative divergence could easily set the stage for a failure of this breakout. Keep in mind, if you take a look at the long-term monthly chart, and this is all monthly data going back to 1990, you can see that it is running into an area where resistance might make sense based on topside RSI line right there. And as long as the monthly RSI is failing to move above that as long as the RSI cannot move above that line, that could be telling of as to where this market wants to go. Otherwise, bulls would like the market to clear that resistance line and trade above it. So that's one layer of resistance potentially, and there's another just to be consistent with the other markets. In fact, if you go back to this break, that break right there in late 07, we draw a line from. So this break is what we are talking about, off the highs of late 07. And you can see pretty much what's happening in the current market. We are coming back to test that red line. All right. In fact, let's back test that line just like we did with the other markets. You can see that here was a trend line break, and that break also coincides with movement off the highs of early 2000 before we went on a major bear market over the next 2 years or so. So you combine that with the previous topside resistance line, and without having any other opinion, you can see that this is clearly a level where the market is going to have to decide whether it has enough energy to move above those two lines. Otherwise, failure to move above those two lines suggests that the next meaningful swing trade or direction could actually be month to month, could be lower. Let's take a look at the Canadian market from a weekly perspective. We've been seeing improvement in price on a week-to-week basis. Take a look at what the RSI is doing. Seems to be some type of negative divergence developing here, which generally sets the stage for a pullback if there's a pullback. Take a look at the daily chart, also showing similar type formation. Slight improvement day to day, but RSI making a lower high. RSI also being rejected as it tried to move above RSI 69.1. So that rejection at 69.1 could be a problem. Take a look at the hourly also. Hourly also failed. You can see an improvement hour to hour. Take a look at the RSI showing resistance on this line. And recently you can see a short-term double top. By the way, that corresponds also with the price coming and breaking here. So there was a trend line break there, and we draw a line from that break point. That also has become a double top area recently at the highs. So you take that information, we're starting to look at a market here that could also be easily pointing down. Take a look at this chart here. We can see that, and I'll show just one line, otherwise it's a similar situation to the charts we saw across the world. But if you take a look at this line here, which is a simple line, and this line was a problem. Once we broke below the line here, the market pulled back. Now we are coming back to back test that line. Failure to move above that line suggests that month to month, if this is resistance, that the next meaningful direction for the Canadian market could actually also be down. And there's also a line around where it is, and I won't go into details here, but it's simply the same line that has been a problem during the major market drops as far as the Canadian market is concerned. So back to test that red line and the previous blue line. Failure to move above those two lines is very telling as to the market's visual intentions. We take a look at the Brazilian market by way of the EWZ. By the way, let me just take a look at the Brazilian market proper, because it gives us a good insight as to what goes on in markets sometimes. So the Brazilian market, and if you recall, many months ago we expected a pullback based on this break off the highs there. The market had come back after a nice showing for 2016, had come back to test this line. I was expecting a pullback because this was a resistance line on the blue line for the highs there of 2010. We tagged this level for the highs of 2014. We did the same thing in 2016. So the most recent pullback month to month has been consistent with our analysis. Now you take a look at the weekly chart, and the weekly chart is doing exactly what it needs to do if the market is to stabilize, coming back and showing uniform activity support, which is why it is holding and not moving lower. Also, we had come back here, it held the 50 line on the weekly and moved to new highs. So as long as the weekly chart looks like it is above 50, that's good. We take a look at let's take a look at the daily in conclusion here. The daily, as we've seen, like many other markets, the Nifty in particular, we can see that the daily is coming back to test the recent break. So those are trend line break. I'll draw it somewhere there. And that line has been a problem since. Resistance here for the highs there. We're coming back to test that line. If we don't move above that line, chances are we stall and we see a day-to-day pullback. And in fact, if you take a look at the ETF that tracks the Brazilian market here in the US, EWZ, we are having this 50-day moving average seemingly showing some resistance, which corresponds with the daily chart coming back to test this line here. Actually, it's even slightly lower. So we can draw it a little bit lower than that to correspond somewhere there. The last time we hit that line was during the highs somewhere there, and we pull back. Coming back here and showing that it is showing some type of resistance short term, and maybe this is now suggesting the next meaningful direction day to day could be for a pullback. Otherwise, I want to wish you an amazing 2017 ahead with lots of fireworks. Eric Muathe signing off for 2016 and the beginning of 2017. As always, good luck, peace, and blessings. E-A-C-S. Mwah.